Welcome to my YouTube channel. Today I am going to elaborate some advantages or benefits of life insurance. Also, I will elaborate some misadvantages or demerits of life insurance policies and some of the rules and regulations of life insurance policies. Life insurance is a contract between an individual and an insurance company in which the insurance company agrees to pay a sum of money to the beneficiary designated by the individual upon the insured's death. Here are some benefits of having life insurance. First of all, financial protection for loved ones. Life insurance provides a lump sum payment to your beneficiaries upon your death. This can help your loved ones pay for expenses such as funeral costs, outstanding debts, and living expenses. Secondly, estate planning. Life insurance can be used as part of your estate planning strategy to provide to your beneficiaries after your death. Thirdly, tax benefits. Life insurance proceeds are generally tax free to the beneficiary. Additionally, some types of life insurance policies can provide tax deferred growth of the policy's cash value. At fourth, peace of mind. Knowing that your loved ones will be taken care of financially after your death can provide you with peace of mind. Fifth, cash value. Some types of insurance policies, such as whole life and universal life, have a cash value component that can grow over time and can be used for a variety of purposes, such as funding a child's education or supplementary retirement income. Next is sixth number or point 6, coverage of financial expenses. Life insurance can provide coverage for financial expenses such as funeral costs and medical bills, which can help ease the burden on your loved ones. And then there are some demerits or disadvantages of life insurance. While life insurance offers many benefits, there are also some potential disadvantages to consider. First of all, cost. Life insurance can be expensive, especially if you are older or have health issues. Premiums may also increase over time, making it difficult to afford coverage. Secondly, overinsurance. It is possible to purchase more life insurance coverage than you actually need, which can result in paying higher premiums than necessary. Thirdly, complexity. Life insurance policies can be complex with many different types of coverage and riders available. It can be difficult to understand all of the options and choose the best policy for your needs. Next is underwriting process. The process of getting approved for life insurance can be lengthy and involve medical exams and underwriting. If you have pre-existing health conditions or engage in high-risk activities, you may be denied coverage or have to pay higher premiums. Next is policy restrictions. There are some restrictions of life insurance companies. Life insurance policies may have restrictions on coverage such as waiting period before benefits are paid out or exclusions for certain types of death such as suicide. Next is inflation or price hike. The value of the death benefit may decrease over time due to inflation, which could leave your beneficiaries with less money than they need. It is important to carefully consider the potential disadvantages of life insurance before purchasing a policy and to work with a reputable insurance company or financial advisor to make sure you choose the right coverage for your needs. Then there are some rules and regulations of life insurance companies. The rules and regulations governing life insurance companies vary by country and jurisdiction. Means according to different laws of different countries, there are different rules applicable to the citizens of that country. Here are some common regulations and requirements that life insurance companies are typically subject to. First of all, licensing and registration. Life insurance companies are required to be licensed and registered with the appropriate regulatory authority in the jurisdiction where they operate. They must comply with all the licensing and registration requirements, which totally include filing financial reports and meeting minimum capital and solvency requirements. Secondly, solvency and financial stability. Life insurance companies are required to maintain adequate financial reserves to ensure that they can meet their obligations to policyholders even in the event of adverse market conditions or unexpected losses. Thirdly, consumer protection. Life insurance companies are required to comply with consumer protection laws and regulations, which typically include requirements for fair marketing and sales practices, disclosure of policy terms and conditions, and prompt payment of claims. Fourthly, investment restrictions. Life insurance companies are typically subject to restrictions on the types of investments they can make with policyholder funds. These restrictions are designed to ensure that the investments are safe and stable and that the company can meet its obligations to policyholders. Next is regulatory oversight. Point fifth, regulatory oversight. Life insurance companies are subject to ongoing regulatory oversight by the relevant regulatory authorities. The regulatory authorities have the power to enforce compliance with regulations, investigate complaints and breaches of regulations, and impose fines and penalties for non-compliance. Next is point number 6, and it is last point: policyholder protection. Life insurance companies are required to provide policyholder with a level of protection and security, typically through the use of reinsurance, which is a mechanism that spreads risk across multiple insurers. It is important to note that the regulations and requirements can vary by jurisdiction, so it is important to consult with a licensed insurance professional or legal advisor to understand the specific rules and regulations that apply to your situation. So it was our today's topic. Thanks for watching.